All right, folks, the Mag 7 went from the Mag 7 to the Lag 7 and then the Bag 7. And if you owned it, you were looking a little ridiculous. But all of a sudden, I don't know, maybe they're in favor again. My next guest has been bullish on them for quite a number of years. I'm going to bring in Neuberger senior research analyst Dan Flax. And Dan, we had on the screen there exposure from hedge funds, which had dropped precipitously. Maybe that was the buy signal, but a lot of folks have kind of had thrown in the towel on Mag 7. Are you surprised at just, with the news that comes out and how mighty these companies are and what they're building, that some people have, there's so little faith in them?
I think, Charles, what we're seeing is just as Capex goes up, the free cash flow prospects in the near term are coming down, and that's pressured the stocks. And so if I look at what's going on, though, take Google Cloud, Amazon Web Services, these companies are compute constrained. So they are increasing their spend in their cloud businesses because they see strong returns. As owners of the stock, we like that.
Well, but there was, but when these companies started talking about excess compute, like the big story last week, or SpaceX is selling compute, Mark Zuckerberg's thinking about, can you be compute constrained and have excess compute at the same time?
I think it's going to depend, and we look at all these companies one by one. We're very selective, as you know, and so part of it, in the case of Google, for example, they're using, and they're compute constrained for their internal workloads, but they're also selling compute to third parties. They're setting up clouds elsewhere. And so you want to balance it. What Meta's doing, in my view, is they have a very strong core business. They're considering doing more in and building a cloud business. We'll have to see, but they want the optionality.
So you mentioned the free cash flow. A lot of charts are making rounds. Of course, we've seen the free cash flow has plummeted as these investments have gone on. Now they're raising money through the debt market. And for a lot of folks, one was a yellow flag. The debt is a red flag. But now I'm seeing some indications that maybe by 2030, free cash flow could be at levels that dwarf where we're coming from. Is that too optimistic? Could it happen that soon?
I think it's reasonable. Part of what we're watching over the next several months, and Google has already told us the 2027 Capex will be meaningfully higher, is will the revenue come through? And if the revenue comes through and they keep investing, it may be later than 2030. And so what the market's going to grapple with each one of these companies is whether the growth drivers are durable enough. In the Google's case, I think they are.
So let's talk about some individual names. Apple, which was sort of chastised for not having an AI, they haven't made the investments. They didn't go all in, but now there are reports that they're on the hunt for a chip acquisition, that their own internal efforts have come up short, and that that they're maybe losing out on this race. As an analyst who's followed this company for a long time, should they keep trying to do this internally, or would it make sense maybe to look outside?
Charles, when we think about this company, they've actually been very acquisitive in its technology tuck-ins. In 2008, they bought a little company called PA Semi, and so it's the engineering and the design talent.
But this would be a gargantuan acquisition if it happened.
Potentially, but even in that scenario, given a $500 billion revenue base, in my view, it's more about the intellectual property and infusing it into either their infrastructure in servers, for example. Their real focus is on privacy, making sure that the user experience is differentiated. Ultimately, though, this is about the iPhone install base, services growth, and making sure that their roadmaps, Siri AI, they're likely to have a foldable, that they keep executing on those product cycles. Well,
the stock has creeped to a new high, so obviously that part is secure. I don't think there's any problem there. Moments ago, headline just out on Google and Gemini. Apparently, they're not happy with internally with some of the developments. They're falling short. Gemini kind of saved this stock last year. I mean, going into last year, everyone was concerned about search and other parts of their business. They were able to come out with their TPU chips and Gemini. How critical is it that they get this right?
They've had delays before. I anticipate, and we're seeing it now with Gemini 3.5 Pro. There are further delays, and I expect that to be part of the narrative in the landscape for the foreseeable future. What's important, though, is taking and really harnessing these models and infusing them into search, into YouTube, into cloud, into all of their businesses. That we are seeing strong results there. So it's the revenue, Charles, along with, of course, the technology roadmap. This is incredibly difficult. And no company, including Google, is going to get it right every time.
I just have 30 seconds. So, whether it's Apple, Meta, Microsoft, NVIDIA, Google, Amazon, you still feel really strong about the value proposition that you pinpointed long before almost anyone on the street years ago. That's still in place.
I think it is very much in place, Charles. It will always be lumpy, but if you look at the pace of innovation, for example, NVIDIA, Rubin, their new architecture is going to be ramping, the new platform. Microsoft Azure, their compute constraints. So as long as these companies navigate the near term as they have to do while investing for the long term, I think that can continue to create additional shareholder value from here.
All right, Dan, you know, whenever Mag 7 is in trouble, we say, someone grab Flax, look for him, grab him. Thanks a lot, my man.
Thank you,
Appreciate
Charles.
it.